Hi guys, another day, another video. So I've been thinking to myself quite a lot recently. If you have a bit of money to invest into property, you have an obvious choice. You can split that money and buy a few flats, a few cheaper apartments or properties. Or scenario two, you can buy one more expensive apartment, property, house. So with one of them, you take the money, you split it, you buy a few different properties, which seems like the best way to go because you're diversifying, you're building a portfolio, and that's what everyone teaches you to do. And you have another way, which is putting all that money into one property, one nice apartment, house, whatever it might be. And I just wanted to compare if you did scenario one of cheap flats versus scenario two of a more expensive single flat or apartment or property or a house. Which one is better? Do you really get a lot more money with a portfolio of cheap flats than you do with a more expensive flat? And this is why I made this spreadsheet. So let's analyze it and see what we come up with, see where this sort of this analysis will take us. So scenario one, let's look at £50,000 flats. So if we were to open the Glasgow Rightmove, you can see there's one at £55,000, 2 bedrooms, so they do exist. And then you have more fancy ones, you know, in the center with glass and all these beautiful rooms, etc. for 250,000. So this is extremely unlikely, so I'm not saying my viewers are going to have 250k sitting there and want to invest it. But let's just imagine if there was that money there, whether it was borrowed from the bank or it was somebody's, what is the best way to go? Should you go for cheaper flats in the portfolio, or should you go for a single, more expensive flat, put all your eggs in one basket and hope for the best? So value is the same. If you buy £50,000 flats, you will pay 250,000. If you buy one £250,000 flat or house, let's just put here, or house, you will also pay 250,000. The tax, I've put 8% in here, Scotland, but you can reduce it down to the English tax rate, £20,000 for both, so the same. Legal, I put much higher, so 5 times higher for legal for the 5 flats, because you're probably going to be building it up. You might buy one flat here, one flat there. It's unlikely you're going to buy all 5 in one go. So legal, you have to pay 5 times, so it's 7.5, and you only have to pay it once for an expensive property, so that's 1.5. So in terms of buying, you're pretty much the same, except from the legal cost. If that 250,000 was actually 500,000 or 1 million, buying one property will probably have quite a high stamp duty tax on it, so just bear that in mind. But for this scenarios, you don't need to worry about that. So 6k difference in legal costs, and that's pretty much it for actually acquiring the assets. Then you'll be needing to do a bit of a refurb, most likely. 50k flats, I would say you put 10k refurb into each one of them, so you pay £50,000. £250,000 property, I would say £15,000 refurb. After the refurb is done, you will increase the value. Again, this is a guess, but 50k flat, 10k refurb, £70,000 new value. £250,000 apartment, house, £15,000 refurb, £285,000 new value. So they will both increase with the refurb. I would argue 250k property will increase more, but it depends on the area and a lot of other factors. So this is just an indicative example. You then have, say, the portfolio of flats, cheap flats, or you have one expensive property. You're going to rent it out. So I would say for 50k flats, you can get £500 a month in rent, so that's £30,000 a year. For one more expensive property, you will probably get £1,700 a month in rent. So with that, you're at just over £20,000. Then you need to be running that place. You need to be paying for things. So what are those things? Well, for any rental apartments, you need to pay insurance. 4 or 5 cheaper flats, you need to pay about £1,000 a month, so 200 each. For a more expensive property, £300 a year. Compliance checks, again, 5 times more for the portfolio of 5 flats. Maintenance, 3 times more because you're going to have things breaking. You need to have some money aside for any repairs, etc. And then other, again, I put 5 times more because only a couple of hundred for tiny things in the house, or £250,000 property, versus £1,000 for bits and pieces for the 5 separate flats that you have. So the total for that is 2.7 for an expensive property if you just buy one, and 8.8 thousand if you buy 5 flats portfolio, if you build that portfolio. So what is your pre-tax profit? Actually, for a portfolio of 5 flats, you're looking at about 21,000 a year, and about 17.7 thousand per year for a sort of more expensive apartment or house or whatever it might be. Again, all indicative, but that's the difference. On a monthly basis, you're looking at a difference of about £300 a month, so you're 1.7 or 1.4 thousand pounds in terms of your pre-tax profits. So from that analysis, the most obvious conclusion is you get more money from the flats. Get the cheaper flats, you're diversifying, and it's good. It's good for your business. You're going to get more money. It's better go that route. However, there is another point of view. If you just have one flat, yes, there's a risk that the person stops paying and all your income is gone. However, if that person is good and you've managed to find good tenants, that's a lot less maintenance. You only have one boiler to worry about. You only have one roof to worry about. You only have one property to worry about. You don't have to constantly, in one of them, toilet starts leaking, and another one, there's some weird noise from the kitchen, and then in another one, the electricity needs to be sorted, and it's just constant non-stop. You don't need to think about 5 insurances, which one is up for renewal now, etc. Or the gas checks, I need to do 5 of them. It is a lot less hassle. So it's really a balance, I think, between going more active, putting more work in, and getting more profit as a result, versus going for a more high-end property, making sure you get good tenants, and actually only losing a bit of money every month, but just having more time to be dealing with any issues. Yes, you can have agents and stuff, but you still are the owner, you still are responsible. Some of the other considerations are the actual size and the land, the square meters that you own. For 550k flats, it's probably going to be way more than for one more luxurious place. I would say 50 square meters per flat, so 250 square meters is what you'll own for this one, and probably 100 is what you own for the more expensive one. So you can look at short-term accommodation. You can do some smart things with those cheaper flats where you rent it room by room, for example. All of a sudden you don't get 500 a month, you might get 800 a month. You can get amazing cash flow. So it's really hard to say this is good, this is bad. I think there's both advantages and disadvantages to both of those strategies. Another advantage of a £250,000 flat or apartment is the capital growth. If it's in an amazing area, everyone wants to be there, it might be worth £350,000 in a couple of years' time. Whereas 50k flats, they might be going up slower. So it's something that needs a lot of consideration, but hopefully with the spreadsheet, with this example, I gave some realistic numbers from my experience of property, what the difference in income can be for a buy-to-let. And as always, I'll post this spreadsheet online. It's been really interesting for me to be doing this analysis. Something I've been wondering for a long time. Hopefully it will help some of you guys as well. And I will see you in the next video.